You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, there it is. The funkiest of tunes means it's time for The Funky Show on our network, and indeed the final program of our broadcast week here on the old Options Insider Radio Network. Yes, it's time for TWIFO, This Week in Futures Options, a program where, as the name implies, we break down all the hot activity in the world of futures options. So if you're scratching your head saying, what's going on out there in crude or silver or fluid milk or any of the other legion of products on the futures options side of the fence, don't worry. We got you covered. If it's hot, we'll cover it here on TWIFO. And of course, you can find it wherever you find your favorite Options Insider radio programs, your iTunes, your TuneIns, your Stitchers, your so-ons, your so-forths, including via our mobile app available for iOS, Android, and the beloved Fire OS, as well as, of course, the optionsinsider.com or over there on cmegroup.com or wherever you like to find your favorite podcast programs, including, of course, those of you who can join us live every Friday, 1:30 p.m., 2:30 p.m. Central, 1:30 p.m. Eastern, Central, I should say, 2:30 p.m. Eastern via Mixlr, MIXLR. You know the link You've seen it. If you're new to us, grab that link. We tweet it out. We Facebook it out. We stock tweet it out. We put it out by our newsletter on the website. You can find it pretty much anywhere. Grab that link once and then just save it and bookmark it. And you too can join us live. See how the sausage is made behind the scenes before the beautiful edited podcast version goes up. Easy for me to say today. It's been a long broadcast week, listeners. The edited podcast version goes up for your listening pleasure. And of course, however you listen, live after the fact via the app, hit us up with those questions, those comments. You guys always send us some doozies for this show. We'll try to get to some of those in a little bit. But before we do that, we remind you, of course, the show brought to you in part by our friends over there at CME Group. And if you want to follow along with the show live, not just with the live stream, but also with the live reports, head on over cmegroup.com/TWIFO. Stands for This Week in Futures Options, of course. And you too can generate the reports that we're going to talk about for the rest of the show. So you can see all the numbers we're going to see, the vol, the skew, the hot open strikes and hot interest and everything else like that. So make sure you do that. It makes the show that much more fun to listen to. Speaking of fun, let me welcome on my cohort, my partner in all things futures, options, crime, the yin to my yang, Mr. Nick Howard, the founder of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to the program. I'm glad you can join us live from your spring break locale in a secret location not to be revealed, sir.
Yes, glad to be back again. If you hear any noise in the background, I apologize. I tried to get into a corner of the little section here. So hopefully, I feel like I'm on a secret phone call right now. Hopefully not too noisy back here, but we'll do our best.
You're in the cone of silence in the old Maxwell Smart realm. It feels like every other week I'm somewhere, you're somewhere, we're back and forth. One of us is beaming in. It's very rare, like we had it a few weeks ago, where we're both in studio together. You're on one coast, I'm on the other, or vice versa. But these days, we'll make good, sir, because it sounds good. And let's get right on into what's lighting it up today. I figure we'll start it off, Mr. Nick, if you have no objections, as usual, in our hot product du jour. It's the one you guys still ask the most about, still want to know about. If we don't cover it on a particular episode, you guys get mad, you take umbrage. So let's kick things off there. It is, of course, crude, hashtag crude, good old WTI, the product du jour for many of you out there. Another interesting week out there. You know, we've been watching this dance out there in the broad product to see, is it going to break through 50? We saw that last week that it did. Is it going to maintain those levels? Well, yes, it did. It kind of rallied again, closing right around gaining about a handle and a half or so, pretty much across the term structure this week, settling around 52, 53, again, depending on where you're looking out there on the term structure. But again, north of that much watched, very important, that critical 50 handle, which is a key, I know, decision maker and driver for a lot of you out there. Of course, I think maybe some of you out there who have perhaps been expecting vol to pop yet again, not getting that delivered so far this week. I think crude vol, the technical term, is in the toilet. Whether you're looking at the implied here in the old Quick Strike report, or maybe you're looking at some of maybe the VIXs around crude, like the OIV, which is, of course, the VIX of WTI. That's in the low or mid 20s or so, which is about 10 handles lower than where people previously thought the floor was last year in the mid or so 30s. So yeah, crude vol, I think technically in the toilet. Not a lot of love out there for the premium buyers, at least of late. Remember we talked a couple of weeks ago where there was that big spike in crude volatility. We said if this sell-off didn't continue or if it halted, we were going to see that vol come in. And of course, that's exactly what we saw. The last week, the sell-off halted, the vol came in, and then we saw it turn around. And of course, the near-term calls have some bid. I'll let Nick get into the skew in a minute. But we're still seeing the premium is still to the downside. So if you want to see a market increase in vol, it's going to take a sharp, aggressive gap up or an even more aggressive gap down to really give us a nice boost to the vol, primarily to the downsides where you're going to see a lot of the vol going forward. In terms of what was the hot strike, what was lighting it up this week, it was out there on the upside, and it was again in the front month. It was the May 53s lighting it up, number one with a bullet this week, a total of 32,000 contracts lighting it up. A lot of that opening. Fairly even paper across the board, except for Tuesday. That was the laggard of the bunch, only about 2,500 contracts going up. The rest of the week, substantially more. And a good chunk of those opening throughout the week opened nearly, about 8,000 contracts of that total this week. So a good chunk of opening paper going up out here in the May 32s. And actually followed, I misspoke. There was a little bit more on the dark side. It was the 50 puts with about 1,000 more lighting it up this week. So they're actually number one with the bullet. Got to push the 53s down one notch. 33,000 of those 50 puts going up this week with a lot of those coming on Wednesday, about 6,300 or so on the day there. So an active week, 50 puts, 53 calls, kind of a breakdown you might expect out there across the board. But it wasn't just in the front month. No, even though front month accounting for nearly half of the volume this week, about 49% of the total volume that was lighting it up this week came in that front month contract. But no, it wasn't just there. It was also in the June contract where we saw the June 50 puts lighting it up this week as well. And coming hot on the heels of those May 50 puts with about nearly 30,000, 29,800 to be precise. A big chunk of those, about 10,000 and change coming on Wednesday, almost 10,000 coming on Monday as well. So about 20,000 of that 29,000 and change coming on Wednesday and Monday. And a good chunk of that, again, opening this week as well. So a lot of opening paper on both sides of the equation, 53 calls and 50 puts. Again, a little bit tighter than the usual risk reversal, the usual strangle we see out here in WTI, which is usually about 5 handles. This is getting down to about 3, but still here in the nitty gritty for hot volume. Things still lighten it up out here across the board. Open interest up overall net about 4% this week, but it wasn't all front month. No. If you look again, I recommend listeners, if you're playing along, if you're following along live via the cmegroup.com/TWIFO report, go up to the expirations tab. Make sure you get into the Jan Dees 2018 tab as well. Maybe you click on Jan, maybe you click on June and D, some of the big kind of the big serial months out there, and then you could see some more of the paper because the default view is just going to be for this year. And then you could see, for example, the Dees of this year actually coming up. That would come up in the default report coming up, doing very active, the D75s with about 5,000 contracts and change going up. A good chunk of those opening on Monday, about 4,000, closing out about 1,000 of them on Tuesday. So perhaps getting the better of himself on Tuesday when he realized 75 perhaps a bit aggressive out there. Also saw some long-term put action out there in the June 2018 and Dees 2018, 45 puts and 40 puts respectively, with about 1,500 and about 1,300 going up out there as well. But still, interesting stuff. Before we move off of crude, Mr. Nick, I know you've been watching this quite a bit as well. I know you've also been playing around with the quick skew, which we always like to check in with because, of course, it's my favorite way to look at Skew, quite frankly. If you're out there watching Skew, I don't care what the product is, if it's the indexes, if it's fluid milk or lean hogs, or if it's WTI here. You need to know what's happening in the put wing and the call wing, respectively, and indeed separately, because that's how you kind of put the two together to get a real flavor of Skew rather than one abstract number that's kind of that's open to interpretation. So that said, Mr. Nick, what's cooking in the quick skew, and what else caught your eye this week out here in the Texas Tea?
You did a real good job of covering the open interest and the most actives for the week. I think what we want to probably try to address a little bit is we talked a little bit last week about the change in the vol term structure. So we did see July come in a bit in relation to the contracts beyond it. So that SEP July we talked about looks like it's a little bit in your favor. The June's off in relation to July from a vol standpoint. So that butterfly we discussed probably is about a wash at this point. But when you consider that you did have some movement, you had like $1.60 on the week, you might have been able to get something out of the front month deltas there. But, just looking at it, I know that there was a little bit of a blip. There was an expectation that with the Syria strike that there might be some follow through on the upside, but that didn't happen this week. So what you saw this morning, you saw a little bit of a bump in the volatility early on, and then now you're back off on the May and the June and the July. So again, like we've been talking about for a long time, vol continues to slink down a little bit lower. And I think that's going to be the case going forward here. And, the one thing I did want to make sure we talked about too is not just the quick skew and the risk reversal, but another thing I looked at this week while I was taking a look, and you can sort of conject it from what we're talking about here, but you want to think of, we're showing the quick skew numbers out there, we're showing the risk reversal, so you see how much the difference is between the call and puts, then you see how the difference is between the relationship between that and the money. But the thing to keep in mind then there is, if you see something like, for instance, if you're looking at the May contract right now, well, let's not even talk about the May. Let's talk about the July contract. You see that it's the quick skew is 7.6 capital P, and the call is 7.3 small c, right? So what's interesting about that is when we take a look, so one is above and one is below the at the money, right? But when we sort of neutralize that, we see that the butterfly for that spread, the call plus the put of the 225 delta options divided by 2 minus the at the money, that's basically a flat volatility, more or less, right? So you can just look at the percentage difference between the two, right? It makes sense, right? One's above, one's below by the same amount. So when I start to see that kind of thing, you're in a low volatility environment. What I think might be a good idea here is, being short the at the money and buying the outside. So short the iron fly. You're looking for anything in this low volatility environment, what you can do to try to do some trading or to take advantage of what's going on, given that the volatility is so low. So you can be short the body and long the wings. If we stood around, you more than likely get some decay out of that. If we do happen to move, you're going to move one way or another into one of these long strikes you have. So you're going to get a longer gamma as you move up or down. So something to consider there. But as far as the skew, if you look, you can tell the numbers, they haven't really, well, you can't necessarily see it. I could see it. I think what we're going to do is we're going to put last week's number in there as well on the main report on the site. So looking at it from last week, I can tell you that the quick skew has not changed much. The skew itself has not changed that much. Front month tends to be front end June and July. They got a little bit more positive, but everything after that is still biased towards the puts. So nothing really exciting outside of the fact that volatility is still lower. That May becomes a 10-day contract, so we're going to start not paying attention to that volatility. But the June, which is a 40-day contract, came in about 1.125% today. So again, we continue to see that slide in the front contracts, where usually you'd expect those to be most volatile. In this product, you're seeing them be the least volatile, and you get a very flat term structure from July on out. So I still think, looking at those butterfly straddle spreads are something of value, and also internal to the months or intra-month is the looking at the short iron fly as well. But other than that, we see, Mark, you mentioned, I think, take a look at the report. I think we had a couple strikes out there that we need to reconsider when we're looking at it. I went out to, even when you went out further to the June of 2018 and the December of 2018. And what's interesting out there is you're getting a wider range of strike trade. So further out in the curve, people are trading a wider range of strikes. Tighter to the curve, there's not a lot of expectation, thus for the structure, the term structure that we're talking about. So, keep an eye out there. And the one good thing I'll point out now before we forget about it is when in the next broadcast, the users that are listening live during the show and only live during the show will be able to click the same links that we're clicking during the day, and that includes the quick skew. So you'll be able to see the 3-month history of any volatility. You'll be able to see at least a 3-month history, and you'll be able to see all of the deep dive tables that we pop up during the show. You'll be able to see those as part of the show. So we're only going to make it live for an hour, but I think that's going to be a good incentive for people to come on board, pay attention, use the report, and then also maybe drive some questions during the show as well. So I'm looking forward to that.
Looking forward to that as well, sir. Really quickly, too, it's been a kind of an ongoing narrative with us here, looking at what's going on in the WTI weeklies. You don't bring them up that often, but it's kind of worth looking yet again. This week, we're talking about the number one front month active strike being the 53 calls with 32,000. For all of you asking what's going on in the weeklies these days, the most active front week contract is the 51 half put with 242 contracts. And you get out a little bit farther, the week 2 or week 3 actually is 52 put with 120 contracts. And then the 53 call rounding it up on week 4, 612 contracts. So again, the weeklies out there in crude, for whatever reason, still not attracting a lot of the action. Tons of action in front month, people lighting it up there, no problem. When you get into the weeklies, and again, you can find those for yourself. Click on the report, click on the weekly section, just highlight those. You can see why we don't feature them on the show that often, even though they are an interesting thought question. Why do so many people trade the front month and yet not the weeklies when it comes to the options out there in crude? We've debated it endlessly on the show. I'd be curious your thoughts. If you haven't, we've asked that question to a lot of our guests, and maybe the devil is in the details of the contract when it comes to that one. Speaking of contracts, let's move on to another area you guys like us to touch on quite a bit. All the gold bugs out there saying, what's up in them thar hills for gold? And this week, what we saw was a bit of a rally, I guess you can call that. Some mild upside with most of the major futures up about 5 handles to end the week, which is a decent little move out there, but not the aggressive downside or upside spikes we've seen in recent weeks. And number one with the bullet, the underlying rally, it was a bit of a close fight, but number one with the bullet this week were the 1300s out here. Looks like this is, what is this, August? Oh, no, I'm sorry. This is wrong month. Looking at June. June, easy for me to see. I have so many columns up on my report now that it's sometimes a challenge to find them all. But there we go. With the 1300s out here in June, doing nearly 7,000 contracts of that, about 6,700 of that, nearly half, about almost 3,000 coming on Monday alone. So a big spike, a good chunk of opening paper out there on Monday in the 1300s. So the gold bugs out there in force yet again. This week followed. Number 2, though, wasn't all bullish, wasn't all sunshine and smiles and puppy dog tails, because the 1230 puts, the gold bears, also playing this week as well. The total of nearly 6,000, so about 1,000, little less than 1,000 less than the 1300s, about 5,800 and change of these 1230 puts coming up here with the big day coming on Tuesday. Nearly 2,000 of that 5,800, so right about a third coming on Tuesday as well. So interesting. Again, Nick, that tug of war continues out here in gold, just like it does in crude to a degree. The bulls and the bears clashing pretty intently out here. If you, again, change your report, you can see we have seen in recent weeks some interesting long-term upside action in the gold options. Didn't see that so much this week. We did see about 500 of the 17 halves out here in June 2018 going up, and those are actually opening. So perhaps some upside love there. So a 500 lot, not the biggest, but again, you get that far out, you don't need that much really to cost a pretty penny when you're going that far out. So a 500 is a decent size for those. So maybe a long-term bull, long-term gold bug coming back to play out here in the old crude. In terms of vol, it was a bit of a mixed bag this week, mostly pretty much unched. Brief tick up here, but again, this is not perhaps the resurgence of crude volatility that some long premium players out here in gold probably wish it was. Speaking of vol, Mr. Nick, what caught your eye this week out here in gold volatility skew and in gold options overall this week in the shiny stuff?
Yeah, I think it's sort of a similar look to what we just discussed in the crude. Again, not much change in the quick skew. Still calls are bid over the puts. It's been that way on this. I think we hit lows a couple weeks back or 3 weeks back. We were below 1,200. We steadily kind of run back up. The gold had a little bit of a bump this morning with the overnight activity again with the Syria bombings, and then a little bit off then from its Yeah, so the change, it's up like a 1.5 on the day, but I think it was up a bit higher earlier in the day. So more of the same, really low volatility here. We're talking about an 18-day option with less than 12 vol, and then you're looking at June, July, August, and September, all under a 13 vol. Calls are bid, puts are offered, puts are flat, puts are basically flat to the at the money, something like that. You feel like you almost want to be, own the wing and short the body, and then maybe even do the same thing where you're, long the call on the at the money and selling the upside 25 delta call, take advantage of the vol differential in the curve itself. But nothing real exciting in terms of changes here. You mentioned, the good thing is there's still a change in open interest, which is great. So that means there's still activity there, but we're sort of grinding back up in the future. So, although vol's up a little bit this week, it's really not doing anything at all. 0.5% is not going to make anybody excited. So kind of, I know from watching Twitter and I follow a lot of crude people and a lot of metals people, and they're, kind of discouraged with the activity here in terms of the volatility. Especially people thought there might be a little bit more with what happened overnight, but it doesn't seem to be the case. So is there anything interesting out here? Unfortunately, this might be one of those shows, although there's some interesting things we're going to talk about next that are some positives based on what we discussed last week. But, no real change here. Vol still, it's not in its all-time lows, but it's down by its lows. I think you got to pay attention here as far as what this looks like overall from the term structure. It's kind of a flat term structure out the first year. You're basically going from like a 12% to a 13.5%. So that's not a tremendous amount that you're looking at, especially when you're talking about a 17-day option all the way out to a 411-day option. The expectation would be that might be the case. So anything exciting? Nothing too exciting. Positives, open interest is up. You're seeing some upside calls trade even further out, which is always good. That means there's some expectation that things are going to, people are at least speculating that there's some expectations of movement. But just like crude, I think gold is in the same boat. We're going to have to see. I think another move down in gold would probably do something for volatility. The grind up, I don't think is ever very good, especially if it's grinding up small percentages per day over the week. You get a big pop there. There's going to be a chance to do something with the volatility, but both of these are pretty range bound right now. So like we talk about all the time, when we look at stuff that's range bound, we want to go out there and look at sort of the total open interest across a period of time and see what where that range might be based on the open interest in those strikes, and then maybe plan some of our trading around that, as well as some of the levels of volatility that we're seeing here. So same in crude, low vol, not much activity going on. It feels like it's late in the summer right now. I don't know, just from a trade standpoint. I was complaining the other day. I was talking to somebody, and I just said, boy, it's just really, there's not anything exciting to look at. Although, again, there were some things that happened in the market today from a movement standpoint and a trade. But, in these two products that we cover a lot, not necessarily anything too exciting.
But there is stuff exciting. I know a lot of you guys also ask us about all things index, and we don't talk about it a lot on the show because we have so many shows that cover that. But of course, a lot of you these days are interested in all things E-mini. So ask and you shall receive. By the way, just tweet it out for those of you listening live. Just tweet it out, a little pop quiz for you on TWIFO. Which commodity is catching your eye right now? So that should be coming your way. It's on Twitter. It'll be coming your way on Stock Twits and other outlets very soon when you follow us at Options. So another bonus point for listening to the show live. You get to play along live. Well, let's move on out into the E-mini, another place where I know a lot of you guys like to play these days. And it's kind of a little bit of an inverse of some of the other things we were talking about. We were just talking about the lack of action in the weekly. So you'd be forgiven if you leave the weekly action off of your TWIFO report for WTI. But when the minis, it's the opposite. If you don't turn on the weeklies in there, and some of them are actually on by default, but if you don't activate all of them out there, you're missing the lion's share of the story, indeed the lion's share of the action. Lighting it up yet again this week out here in the weeklies. Number one trade out here in the E-minis this week, Mr. Nick with a bullet. Actually came in this morning, so surprise, surprise, we got non-farmers popping off. We got, of course, some issues out there, shall we say, in Syria. A little bit of unknowns popping off out there in the Middle East. So surprise, surprise, number one trade for the week with the bullet came in this morning. It was the 2,000 puts. I believe that is week 3 out there. 40,500 of those bad boys lighting it up for the week, and 37,500 of those coming today. So yeah, someone deciding, all this news out here, perhaps not the best, a little bit concerned, going out a few weeks, picking up 40,500 of, we always talk about this on the show, why these even number strikes have such magical resonance for so many people out there. Someone out there, perhaps with a long portfolio position looking to hedge, that's probably the big bet. Could be a spec as well. I'll have to look and dig around. This just went up this morning. I'll have to dig around to see if I can find perhaps another leg of this. Maybe it was a spread. Maybe there was some ratio going on out there. But number one with the bullet this week, Mr. Nick, the 2,000 puts, lighting it up for size. 40,500 contracts. Followed, then the next one is a little bit less than that, shall we say. It was in that front week, which is now a daily contract. So that contract lighting it up today was the expiring today 2370 calls, lighting it up. Actually, a bit of a tie with the 2360s and the 2370s doing like 60 contracts different, about 29,074 for the 60s and about 29,017 for the 70s. Both of those very active this week, a lot of opening paper as well. The 60s coming in fairly aggressive today. So I did mention that a little bit longer term, a few weeks out, big put trade to the downside, obviously 2,000. Fairly bearish level for 3 weeks out there in the S&P. But 10,000 of these 2360s going up today, which is interesting. We'll have to see. Maybe some of that is indeed closing paper. Because if you're opening right now on the 2360s, expiring today, that's an interesting, shall we say, roll of the dice out there. And then getting a little bit farther out there again, out here into the actual monthly. People do play in the monthlies as well. Believe it or not, about 27% of the total volume in the E-minis this week coming in that front month contract. And we saw the 2,300 puts. So perhaps a little bit more reasonable bearish hedge, a little bit more reasonable bearish exposure out here with about 26, nearly 27,000 of those going up this week. The lion's share coming actually on Wednesday. We're about half, 13,000 coming in on Wednesday in one big clip. Surprisingly, not as many today. Everyone was playing apparently, or someone was playing in those week 3 2,000 puts out here. Pretty active stuff. We've been talking about kind of the lack of volatility out here in the broad indices. That was yet again this week. We did see a little bit of a blip out there with non-farms and some other things going on, but still not enough to really move the needle. But of course, Nick, we've also been talking about Skew quite a bit. That, of course, really kicked off a couple of weeks ago when the Skew in the S&P 500 really hit some really record levels out here, and there's a lot of debate, which we, of course, thoroughly debunked on this show about what was actually driving that. When you look at the quick Skew, you can actually see it was a depressed call premium really inflating that Skew number, not just a put buying that everyone assumes that it is. That said, Mr. Nick, what caught your eye out here this week from a Skew perspective as well as some broad E-mini options activity?
Yeah, I think a couple of things I wanted to mention. One of the reasons I want to make sure that we talk a little bit about this. First off, we mentioned last week how the Monday weeklies were going to come on board, and they started trading the beginning of this week, and we already have 22,000 in open interest in those 4 contracts. So that's good news again. And on top of that, you see, people are always asking, where should you trade? Where's the liquidity? You have a 20% increase in open interest this week alone in the S&P. So you're up over at 4.6 million with almost 800,000 contracts trading. 800,000 change in open interest this week with over 2.5 million in volume this week. So there's a ton of stuff to go out there and find that and do that. Now you have your Monday, Wednesday, and your Friday, so you have plenty of coverage here. So good news, new product. All of the contracts are open. That's always a good thing. I'm sure that CME has got to be very pleased and proud of the fact that a new contract comes out and starts trading so quickly like that. As far as the Skew goes, I mean, what we saw, if there was any indication that that things were changing last week, according to the article we discussed. But this week it looks, if you go down and look across the board and compare to last week, I'm seeing the puts getting richer and the calls getting cheaper. So really, nothing has changed there, and now it actually kind of beat it down a little bit more. Now again, we say that, and it's in the actual volatility percent number is not that great, because if you look down the term structure here, you have the first 10 contracts, everything's trading almost under 9%. Some of them are trading under 8%, and some, so there's not a lot of volatility. It's a frightening market when you get vols this low. You still have what's going on with the whole, still within the 100 days of the presidency. You have the bombing in Syria. You have, I saw Jamie Dimon said something today, or him and another guy, and the guy from BlackRock, they talked about how, the market doesn't feel right to them. They don't think things are set up very well. I think they're bearish in a lot of ways. So, given that you're starting to see some people get a little bit skittish, I'd expect I guess that's why the puts are bid and the calls are offered, right? Because I think we run out of steam on the upside. That's got to be what it is. But even so, when you're getting, at some point, just at these levels, at 8%, at 8.5%, 8.25%, at 7.5% on 10, 14, 21-day options, I think we're going to see something happen here soon.
Speaking of things happening, we have to let our listeners happen on the show, because it's time to bring them on, Mr. Nick, for a little futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback portion of the show, where you guys get to take the reins with your questions, your comments really quick. Mr. Nick, before the feedback segment, I put out a little quick pop quiz to our listeners, try to get their pulse, see what they're feeling from a commodity perspective. So I asked them just broad underlying question this time. Keep it straightforward, keep it simple. Again, you only got a few minutes to really ask them the question. So he said, what are you feeling right now? If you had to get long one commodity right now, what would you choose? And I gave him 3 choices, plus, as always, a nice little snarky one. I gave him crude, gold, corn, and then I hate commodities. Mr. Nick, it's only been about 10 minutes, but we got about almost an hour left. It's only a brief poll, so you got about less than an hour to play. But what do you think is winning so far, Mr. Nick, in the first blush here of the voting?
All right, one more time. Give me the again.
Crude, gold, corn, or I hate commodities. Go, sir.
Oh, right now, I hate commodities.
You're going for the snark, huh? No, actually, the gold bugs winning by almost. It just ticked again. It was close to half. Now it's down to 43%. Here again, the numbers evolving, so that could change by the time the show ends. 29% for crude. I thought crude might take it, but I guess gold bugs. Those folks are out there en masse all the time. Only 21% feeling the love for corn. I thought the snark would have a little more too, Mr. Nick. Only 7% saying I hate commodities. That's a good thing. You're listening to a show like this, you should at least have some interest in commodities. Everyone out there should at least want to know what the heck's going on in these products. So keep an eye on these as we keep an eye on your questions. Nick, we always get some fun ones on this show. We had one, a couple of weeks ago, about why is the sulfur content, why is WTI, why is sweet crude sweet versus a regular crude. Now we got on a similar vein here from from Andrew L. He wants to know, on the note of your oil sulfur question, here's another weird one that's been bugging me. Well, that's what we're here for. We're here to debunk your weird questions about crude. He says, if I buy a contract for a barrel of oil and take delivery, do I actually get the barrel? So he wants to know, do they show up to your house and say, here, sir, here is your 1 barrel of oil? Well, let's debunk him of a few misconceptions here. And again, you can find this kind of stuff out for yourself. Head on over to CME Group or just search for WTI contract specs, and you'll find this. You'll see that the underlying future contract, unfortunately, not for 1 barrel, it's actually for 1,000 barrels. So a little bit more on the end user scenario than perhaps you are prepared to take, Mr. Andrew. That said, if you want to do a 1 lot, maybe, who knows, maybe you can find someone willing to play with you. And also, unfortunately, they don't knock on your door and the UPS guy hands you a barrel of oil. That would be fun. But no, they actually will deliver it. In fact, they deliver it to the facility. I will give you the exact terms of the contract here per our friends over there at CME Group. They say delivery shall be made free on board at any pipeline or storage facility in Cushing, Oklahoma, with pipeline access to Enterprise, Cushing Storage, or Enbridge. Delivery shall be made according with all federal executive orders, et cetera, and so on and so forth. So it's going to be shipped to that facility where then it can be shipped out for your use pretty much anywhere across the country. So yeah, unfortunately, no, they're not going to come with 1 barrel. That might be fun though, Mr. Nick. Maybe they should have an option for that somewhere. If you're trading your first ever crude contract, in this case, you just want to do a 1 lot, they will bring one, maybe a gold leaf, a gold painted barrel to your door, just so you can say and show your kids, hey, Daddy did a barrel of crude. What do you think of that, Mr. Nick?
Well, I think if you end up getting stuck with a whole 1,000 barrels, you probably can get a complimentary barrel that's sealed, airtight seal, so you can put it out there and maybe you'll be over a barrel if you ended up not getting out of that contract and you're taking delivery. So, I could probably hook them up with somebody who can. We're Italian and we grew up in Chicago, so there was a lot of those old garbage barrels floating around. So I might be able to hook him up if he's really interested with one of those old barrels as well.
There you go. A generous offer from Mr. Nick to give you a garbage barrel for your own uses, Mr. L. Good question. We like the silly ones here as well. Speaking of silly, next one comes from SillyPuddy. Maybe the makers of that fine children's toy writing into the Twifo program. He says, or perhaps she, or perhaps they, I'm a newly minted futures options approved trader. Well, congratulations, Mr. and Mrs. SillyPuddy. They go on to say, but I'm yet to make my first trade. What product and strategy is your go-to for noobs? Well, I'm assuming when you say you're newly minted, you've gotten all the approvals from your broker, you've signed all the forms, and you're ready to go. Hopefully you have a little bit of education in your back pocket. Maybe you listen to a show like this. Hopefully your broker offers some decent education. Or you went to what we talked about last week, the aforementioned former Futures Institute. Now I believe it is the CME Institute or CME Group Institute over there, where you can go and find a lot of great education on this stuff absolutely for free. You can't beat the price at the end of the day. Well, this is an interesting one, Nick. I'd be curious to hear your thoughts on this. This kind of comes down, I think, a little bit obviously subjective depending on your viewpoint and outlook. In general, when people are newcomers to the space, I like to keep things simple, keep things straightforward, and also hopefully, premium mitigated, risk mitigated. So in that sense, I like spreads. I don't like someone coming in just buying a straight up out of the money call, which is 80% of people's first trade in options, or perhaps an out of the money put, and then watch it erode to zero. I'd much rather have you come in, find a product you have an understanding of. Let's say you're a gold bug. Maybe you like gold. Then you find what your outlook is on that product. You think gold's going to rally. You think gold's going to decline. Keep it in the realm of delta for your first trade or so till you get a handle on some of the more, esoteric Greeks like your thetas and your vegas. Just looking at it as a more directional spec. And then a straight up, at the money vertical is a decent way to play. At the money is going to be a little bit more expensive, obviously, than a little bit out the money. Some people like to go out of the money because it's a little bit cheaper, but at the money will give you a little bit more bang for your buck. You're actually have a contract that could move, and also you're doing a spread, so you're buying at the money, you're selling it out of the money, so you have a nice risk mitigated, premium mitigated trade that's set up at the outset, you know exactly how much you're spending, how much you can make, how much you could lose. And it's a nice equation people can wrap their heads around. And it's up to you, I guess, to really define what product, we talked about gold. Crude's been an interesting one to watch. If you have some viewpoint around what's going to do on that 50 handle, we're right around there right now, about 52 or so. I think we're going to rally. We've said before, the calls have been relatively cheap. Crude vol is very cheap. But then again, cheap vol is usually cheap for a reason. If you've been buying a lot of premium out there, you haven't looked that good out there of late. So it's a bit of a challenge out there to come out and say, here's the one-size-fits-all silver bullet noob strategy. But I do like verticals. I typically like them long premium rather than short premium, just because short premium gets a little bit more involved, a little bit more esoteric for first-timers. I think a long vertical in a product where you have some sort of understanding and directional outlook is a good way to go. It doesn't have to be a call spread. It could be a put spread, whatever you feel. But that said, it's a good way to understand. Keep it small, one lot, a two lot. Don't go break the bank, and then understand. Maybe if you're that nervous, maybe try it in a paper trading account first. That might be a good way to go. Then you can scale up the size a little bit and doesn't cost you anything. So a lot of the good brokers these days, even on the futures options side, offer pretty robust paper trading functionality as well. So if you're that nervous, maybe a couple paper trades first, do some nice long verticals, get a feel for how they work, how they perform, what the skew is in your chosen product. So if you're looking at a product where the calls are very bid, then buying at the money vertical and then selling an out of the money call vertical, you're actually going to be able to do that for a fairly attractive level, because those out of the money calls are going to be pretty juicy versus a product like, let's say, the E-minis, where the out of money calls are not so juicy. So that vertical is going to be a little bit more expensive. So things like that play into it as well, what the skew is in your product. So many things. We could spend a whole show on this, but I want to give you a chance to weigh in as well, Mr. Nick. What do you have to say for our friend, Mr. SillyPuddy, looking for a little bit of push out of the nest?
Yeah, I would tend to agree with that. The spread probably makes the most sense. The other thing, I definitely don't think a short trade is anything good for people that are new to the market. The other way to kind of get in there long, and if you don't even want to do a spread, you can pick a shorter dated expiration. Your premium is going to be a little bit lower, and then you could get a little bit closer to the money, so you really have a bit of a chance to maybe see some results based on the fact that you're close to the money. You've been paying attention to that market. We've had some decent moves up and down in a lot of these commodity products. So, spread or short dated, we have these weeklies in a lot of the products, right? So short dated, close to the money, put or call, depending on what your bias is. One thing to keep in mind is, I just was looking at something. CME Group had their trading challenge, and I would, again, you probably can equate that the people that are part of that trading challenge, because I think it's basically university based, so they're probably fairly new to the markets as well. But the contract that led the trading was the crude oil. So it was crude, and then Euro FX, and then the E-mini, then gold. So it's stuff we talk about here on a pretty regular basis. So those are probably the products that are most comfortable to people, just because people get the crude oil is talked about. You hear about the euro as the most actively traded foreign exchange product in general. People talk about the euro, and then the mini is related to the market, and then gold is what it is, right? Because it's something that people can kind of wrap their heads around. So yeah, spreads are great, and I like short dated outrights. I think that's pretty good as well. And the reason I was snarky on my poll answer is because people aren't very pleased with the commodities right now in terms of what they're getting out of them. So that's why I thought we might get a little bit more snark, but apparently not.
There we go. And we got one more here coming in from NoizeFun. I like that handle. So yeah, time for one more here. And this is, they all want something different, Mr. Nick, and Mr. NoizeFun he says, can we get a silver recap on the show this week, please? Well, ask and you shall receive. We're suckers for nice, formal, pleasant mannered questions. So we'll indulge you with a little silver recap. Mr. or perhaps Mrs. NoizeFun just pulled it up right now. Again, you guys play along with cmegroup.com/TWIFO. Go to the metals, select the silver. You can see exactly what we're talking about right now. Not so much. Silver had some moves a week or two ago. This week, not so much. The underlying pretty much unched off about a quarter, right around the 18 handle, depending on where you're looking out there. So underlying movement, not so much. Vol, kind of a mixed bag as well. Off in the longer term months, a little bit of a creep up there in the narrower term months. So kind of a bit of a mixed bag. I'll let Nick dive into that in a minute with the old quick skew. And again, keep in mind when we're talking silver, we're talking a little bit different contract volume. Even though open interest up nearly 5% this week, but we were talking, hundreds of thousands in the E-minis, you're talking tens of thousands, and you're talking in WTI, and even tens of thousands in gold, silver, a little bit less. The number one with a bullet strike and option for this week were the front month 17 half puts. Again, the underlying settling out right around 18, 17 half puts, lighting it up with about 3,000 total of those, actually fairly evenly spread out throughout the week with the exception of Monday. It's about 800 on Tuesday and about 600 or so the rest of the week. It's almost 1,000 going up today. So pretty even love across the board for those 17 half puts. A good chunk of those opening as well on the week. And that was pretty much number one with a bullet. Then he kind of drops off a little bit again to our number two trade, which is the 1775 puts. So pretty much all near-term, close to the money puts all the time this week in silver, with about 2,300 of those, including, again, today, the big day, about 1,000 of those puts, almost half going up this today and this morning in the session today. So interesting stuff out here in silver. Once again, I pulled it up a little bit farther out to look into 2018, and we're not seeing the longer-term paper that we have seen popping up in gold over the past few sessions. So silver bugs, perhaps not as long-term, not as aggressive out here right now. Mr. Nick, take us home for our friend here, NoizeFun. What are you seeing out here in the quick skew for silver, and anything else catching your eye out here in silver this week?
I think maybe he or she wanted the update based on, it was a pretty flat week, but we did have a move down today. So most of the movement you're seeing on the TWIFO report is going to be coming from today's activity. So we had a bit of a market move up to start, and then we broke down over the last day or two. As far as anything interesting here, we had some vol get bid a little bit this week. I don't know. Let me take a look and see what this looks like from a historical standpoint really quickly. And, really not over the last 3 months. There's nothing nothing really crazy. We're off the highs from 3 months ago. But as far as where we are in general, we're sort of on the lows for the year, actually, again. And again, it's not a surprise just based on what we've been seeing with the other commodities. So there's not a lot of interesting things there from a volatility. It's pretty much a flatline vol. It's a little bit of 25 down to this 20 level right now. So again, not a tremendous amount of interesting movement there over the last year. As far as the skew goes, we haven't seen too much of a change. Haven't seen too much of a change in the front couple contracts. In the middle of the term structure, you see where the puts got a little bit less expensive to the at-the-money. They were above the at-the-money. Now they're below the at-the-money, and the calls got a little bit reacher. So we saw a little bit of a tilting of the curve, and that in and of itself, based on the fact that what the action in the futures was, so that's sort of an interesting change, right? So we had the puts get a little bit less expensive and the calls to get a little bit more expensive. So maybe there's something to be said there, but. Like you mentioned, it's not the same kind of trade. There's a lot less open interest. It was up this week. The trading is pretty active in the first three contracts, and then all the way out to the December contract. So there is something out there, but I think this one is more of a sit and wait type of trade as opposed to expecting to get something out of it on a daily basis. Although if you pick your spots, you happen to hit on some of these movement days, maybe it's a little bit better because we did see the vol pop, but. I think that's your recap. A little bit of a change in the curve shape. Puts cheaper, calls a little bit more expensive, and vol up, but pretty flat and steady over the last 6 months to a year.
All right, Mr. Nick. That music means we've come up against it yet again, sir. That unfortunately brings to a close our episode of TWIFO and indeed our week here on the old Options Insider Radio Network. Thanks to all of you who could join us live or after the fact or in between or via the app or via social media, however you consume and enjoy and follow along with our content. We love to see and hear from you guys, so keep them coming. And before we go, I should remind you, check out our friends again over there at CME Group, cmegroup.com/TWIFO. for all of these reports. It's not just during the week or not just during the show that these reports are live. They're active all week, so you can go check them out whenever the mood strikes you. Midnight on a Tuesday, 7 a.m. on a Thursday. Yes, the TWIFO page is active and live and bringing you fun data. So that's a little gift from us and indeed Nick and the CME to you guys throughout the week, so you guys can get your commodity goodness, play around with the weeklies and E-minis or WTI, whatever the case may be. Whatever floats your boat, you can do that in between episodes. All free of charge and fun for you guys to kick the tires. And I think Mr. Nick's got some cool stuff coming to that report. So let's check in with them. Mr. Nick, you guys are always working on cool stuff over there in the land of Quick Strike. What's coming down the pike for our listeners this week, sir?
Yeah, like I mentioned in the middle of the broadcast, we will be opening up those links on the report, so you'll be able to see that detailed information during the show. And again, it's during the show only because we want to, drive some traffic to the show as well. So there is some interest about the information that is available in some of the other versions of Quick Strike. So that's really, I think, the big thing to take a look at in the next couple of weeks. And so next time we're on the air, we'll make sure we mention that right off the bat. We'll tweet about it early on, and we'll get you out there, and you can really take a really good, close look and really follow along with everything that we're saying, because you'll be privy to the same information that we are.
There you go. Check him out, and while you're at it, give Mr. Nick a follow at QuickStrike1 on Twitter. Him and his team always tweeting out cool stuff. That's QuickStrike1. To follow him over there, I'd say follow at CME Group, but most of you probably already know that one already, so that's pretty easy. I should mention a bit of a programming note. Here in the U.S., most of the markets, in fact, all the markets are really closed next Friday, so we won't be coming to you live with a show. You probably get a nice greatest hits, best of episode next week for Vol Views and for TWIFO. So, unfortunately, no live show next week. We still get some goodness coming down the feed to you. So, in 2 weeks' time, when we get back here together, you guys can check out the live updated feeds. Unless Mr. Nick wants to let him update for you during showtime next week just for fun. Maybe he'll decide to do that. We'll see. But that's a fun little added bonus for those of you out there who can join us live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixer, so you can stream the show, you get the report, and you get all those cool links live, so you can click on them and see more detail like Nick and I do, which is usually reserved for the paying Quick Strike customers. You guys get access to it free of charge during the show, so you can see all that stuff like the chart for the quick skew, not just the number, and all the other stuff like that. So if you want to see a little bit more detail, kick the tires, play along with that. The ports are always free throughout the week. Going to turn on some extra functionality during showtime just for you guys. And on behalf of Mr. Nick and our friends over there at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great questions, such many and varied questions. Keep them coming. And we'll see you next time right here on TWIFO.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.